What's going on, traders? It's been a while. I apologize for the break in the videos. I had some stuff going on outside of the market, but that is behind me now. So we are back in action here, taking a look at the market, see what we can take away from the charts and some of our data points that we like to analyze and interpret, and formulate a game plan for the rest of the week based on the charts and logic, no bias. So let's get into some of our data here. Of course, this video is for educational and entertainment purposes only, so in no way should be viewed as financial advice. It's safe to say here, though, the market has gone into ludicrous mode. 4 gap ups in the last week here, and CPI now is behind us, and the markets reacted very favorably to the print, pushing us finally over the October swing highs, now creating a new weekly uptrend here. Now, we've already been talking about the daily uptrend being created, and we were just waiting to see if we really could get over this 437 437.95, 438 area right here, at the swing highs. Let me get out my drawing tool here. Sorry about that. And regardless of the gaps that have been created and the poor structure, we are just keep chugging up higher here, without any kind of real pullback, which has made it very difficult for me personally to initiate any serious long positions here after gap up, right? Very poor structure created below, but as it stands, we are obviously in a serious parabolic move almost. Here on the markets, moving about, say, 50 points or so to the upside, maybe 45 points, to the upside here. So you can see here I marked off that weekly swing high, or excuse me, the swing high that we needed to take out to confirm that new weekly uptrend here. I've said this for the last couple of videos, and it's just like, it's very tough to get long on all these gap ups here. But what would we want to look for overall, in the market to see? Ideally, and it seems like a long shot at this point, but, we would want to see a retest, right? Coming back and retesting this prior breakout, coming into here, and then from there we can get that next launch pad back up higher, right? So ideally that's what I would be looking for, maybe to initiate any swing trades, but if we start to break back under that the October swing high there, then we're kind of back into this no man's land, this kind of chop area. We can call it right here like this, down into 132 thereabouts, and we would be trading back, in this range like this. So we'll see if we do get any type of back test. Obviously, right here, a very huge gap potentially to get filled. No real shares were transacted here. So we'll see what goes on over the next couple of sessions. Of course, we do have PPI tomorrow. It's not quite the same a market mover as CPI, but we will keep an eye out on that data release at 8:30 tomorrow morning. So let's see what we get. All right, so let's take a look at some other charts and see what we can take away. Let's come into our daily fibs here and channel. We probably have just rocketed over, the 23.6 here. This is a nice recapture. We're going to want to watch to see if this 446.25, 446 ends up holding. If we do start to break under that, there is that chance that we trap these late poorly positioned longs and we get a liquidation move back down to fill that gap. potentially into maybe 441. We'll be watching 440 as well, but the main level that we already kind of went over is this 38.2 extension, which is that October swing high that I had previously mentioned. So the healthier price action on it to me would be coming back, retesting this breakout, and then moving back up higher. Does that mean that's going to happen? No. Last couple of sessions I was talking about the poor structure that had been created over these last few gap ups, and did that get filled? No, the inefficiencies did not get touched as of yet. So I'm going to keep an eye on this 446. Again, it's very easy, to get trapped on a late long here potentially, and then you don't want to be the last one at the party. Dancing to the music. So everybody's very comfortable with buying the dip right now. Am I calling that we're going to come all the way back down to 425? No, not necessarily. But we still just want to be very cautious with this market and the rally that it had. Yeah, we will see definitely big ones to keep an eye on, that 446 basically and 438. We will watch that closely. All right, let's go into some other charts here and see where we are. Let's take a look at this big picture chart. Let me zoom out so we can see a little bit clearer what we are looking at here. And actually, let me take this area off. Don't need these levels for now. This is mostly a trend line chart anyway. All right, so the main thing though that I am watching coming into, and it's this orange trend right here, right? This trend I am going to be watching very closely. You can see here multiple points of contact on this trend line. Boom, 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 boom. And here we are coming right into this trend line here on the daily. So we'll watch to see. That's kind of where we stalled out today at the highs. We'll just keep an eye on it in the next session. Basically, it's going to be over 450 is going to be the next level. That's where we pretty much stalled out today. So if we do break tons of stops probably right in that area, if we do break over that 440, I wouldn't surprise me at all to see a dollar move back up higher. And when we get down a little bit more granularly, I will show you guys where I think we would be heading into from our balance zones, right? But certainly here for EMA traders, here we have the 200 now, the simple crossing over the 9 and 20. 9 and 20 are also crossing over. The big issue though for me a little bit is I like to also look at when someone says a stock is overextended, right? What are we looking at, or what does that potentially mean? Well, the 20 period moving average for me, I like to call that kind of like homeostasis, right? That's, say, the average body temperature, if we were to make a human analogy here. And, some people call this, mean reversion trades, things like that. But look at the space, right? Look at the space and the time that it's taken us to get extended, right? A short amount of time, and look to move away from these key moving averages, right? And let's look at the space, right? The 20 is sitting at 432.66, right? And we have all the space from there all the way up here, right? This is not necessarily the most healthy thing that you want to be seeing with this much of a gap between where price is and our 98.5 or whatever the normal human body temperature is, right now. It goes without a doubt saying that the S&P has a bit of a temperature right, the old fever, as sometimes we can find ourselves having for whatever reason, as mysterious as it may seem. So let's keep an eye on this because, from with this amount of space, this again makes me very, very cautious. You'd have to think that markets are going to want to correct a little bit, come back a little bit to earth. That's fine. They can come back. They can fill this gap, totally still be bullish. There's nothing really that bearish right now kind of going on in the market, or rather, other than this incredibly poor structure that we have created. But there could be, as I was talking about before, coming back in, testing these swing highs here, where we broke out from, really can offer us some better risk to reward for potential swing trades, right? Now, we're getting very close to these new all-time highs. Do I think we're going to get there? I'm not 100% sure. We shall see how the end of the year starts to play out. But if we also just look at it from this perspective, we've got our high here, right? And that was around 250. What is this? 459.50, 742, somewhere in that area. So we'll have our swing high here, and we have another high right here. And we've got another high right here. And this one is, what is this? 451.08. And where do we stop today? At 450. So, can we still say technically it is still technically a lower high, right? But over that 450, as I said, I think we'll get squeezy there, and we'll just come up into these equal highs at 451. So that would be the most likely scenario to me if we do get over that 450, and then we'll see how the markets start to react up in that area. But as it stands, the weekly now and daily and monthly are all in confluence with the uptrend. Yeah, that's just what's going on right now, and so. Can we pull back? Certainly we could. How deep that pullback is going to be, will be interesting. There's a lot of areas that the bears would need to break down to really see any significant selling. But however, as I mentioned, you just got to be extra careful. Not a time for any new swing trades to the long side. Just wait for better risk to reward. I know I said that back here. It just never really came, and it's been just kind of a wild market all the way up. But really beautiful move, though, since we kind of came into that downside target pretty much exactly where we ended up finding the lows from, right back in that prior consolidation from last springtime, and where all that volume was. So nice move there for anyone that caught those lows instead of trying to long every move on the way down, getting all excited, right? I remember a couple times when we bounced off here, everyone thought, yeah, okay, now we're going to rally forever. And then, no, we just ended up making a new low, right? So, you really just have to be, cautious and just, keep the bias at the door, and you look at things, as objectively as possible. So let's see if we get that back test. Let's get a little bit more granular now. And actually, I didn't. I was having some issues. All right, we're going to skip the day trading fibs. We'll go over that over the weekend. I did not update them quite yet. Looks like we are. Oh, this week's range. Did I have that still on here? I do not. Okay, I'll have to redo it for next week. All right, I'll do that. Let's go into one other bigger picture chart, though, that I wanted to look at. And that was our main daily. Let's go into that. We haven't looked at that in a minute. Boom. Okay. And we were talking about that trend line. I was pointing out the orange one. This is the same trend line I was mentioning earlier that we are coming back and retesting here. This is that megaphone trend line from that prior consolidation that I mentioned earlier, where we hung out. Right? So we had the megaphone like this, and like this broadening kind of wedge, right? And then we You might not be able to see it there. We finally broke out. But if you extend this megaphone trend line here, that's where we're getting this one. So it's a little messy, but you can see it there, hopefully. So very interesting spot. Next spot's going to be up over 441, 440. Is going to be pretty much another dollar up, right? And that's going to be retesting the prior structure where we broke down from. That really started this whole downtrend that we experienced here from back in summer. We hung out here, right? And then we broke under the structure here under 440, 452. And then we came back up, back tested, came back down, kind of put in an equal high here, a little false break, and then burn, and then the downtrend can start it, right? So it will be very interesting to see if we come up into that 440, 452 area. It's going to be a real major test there in the markets. But first thing that the bulls are going to need to do is kind of rip up over this. Now we've got PPI, as I mentioned. There is that chance that we see consolidation. I mean, you know, we did get a little bit of consolidation over a few days right here. The chance for the bears to put in some type of a distribution move. No, we ended up breaking out. But let's be careful. Now, again, we've made another huge gap up. What's the more likely thing? Again, we have PPI, but markets, you know, just run a sprint, basically. Let's keep an eye out for that consolidation type of price action, maybe through the back half of the week, as markets now try to accept these higher prices overall. But you know, we were talking about that 446. We will keep an eye on that, but also be very cautious if we start accepting under 440. You can see then that will lead us more than likely back down into 439, 437 area, back into this prior consolidation that we just broke out from. So the key areas to watch is that 446, 444. And then if that happens, you know, we could easily see that liquidation type of situation, trapping those poorly positioned longs that maybe even got in here on the 15th or even today. So just be very careful. As I said, I don't really see the risk to reward for the swing trades, but of course I did say that when we were at 430. You know, I was hoping for a pullback into a daily higher low, and then we were going to be able to attack the swing trades to the long side, but it just never happened. So that's the way it goes. The other thing, though, we want to point out, you know, the daily here starting to get spicy again on our Hello Momo here. So we are getting into those oversold conditions, overbought conditions once again here on the daily. Are we outside of value? Well, no, I don't have it on this. No, at least on the 3-year, we do have plenty of room on that. I know on the daily, we are outside of our value area, but we are starting to get some of these overbought readings coming in on our Momo. So I'm going to keep an eye on that as well. Yeah, I just wanted to check we are outside of value here on the daily chart. Let me just kind of come back in because I wanted to see yesterday, right before CPI, I was looking as we were coming back to test this weekly POC. So I want to just come into a clean chart and just check out. You can see how extended again we are outside of value. Let's just go back into this and try to see. Okay, ripped up through our VPOC here, and we have value area high sitting at 453. So we shall keep an eye on that as we approach, if we do get up there. And that's pretty much going to take us up into this equal high zone here. So all right, let's keep moving along. And okay, so from the weekly, not really too much any overbought or oversold, but we were watching over that oversold reading here on the weekly, and what a move. All right, let's get into some of our other charts. I haven't had a chance to go over yet. Let's start off with TNX here, which has just been obliterated over the last few sessions. And here we are. We were talking about under 47 would be where we would really start to see a stronger move to the downside on TNX, and then obviously this upside move in TLT and in the markets. And you can see here what happened, right? When we came into that 47, we came and traded at that 4.7 a few times. You can see right here, boom, right 4.7. And if you were watching on TNX, nice opportunity for some longs here right on the 13th. Well, yesterday again, it was tough because you were coming into CPI, but you can see here now how this really is reacting as this key area that would have needed to hold for rates to sustain, right? And, we were hanging out up here in this area. We were wondering, this chop fest we were talking about, possible distribution, and it just kind of peeled over, and it was very spicy, right, as we were up here on our weekly. So next area we will be watching, I'll be watching personally, is going to see if they can bring us down under 44. And if they do get that, 43.30 are going to be the next kind of area I'm going to be watching to see what kind of reaction we get if we come back into that area. It looks like we're going to try to fill this kind of gap here from 44.25 down to just over that 43. Where is that? 43.60, 43.50 area. So some areas to keep an eye out on. But as long as we stay under 47, all is good on this viewpoint. If we want to wait, or if you want to wait, I'm going to mark this off. Another opportunity that we could see and we'll just throw it up right here. Okay. What we could see, and this is about 50% retracement of this daily candle, right? We would come back up. You can see here the reactions that we've had around this 45, 25, 45, 50 area. You wait, have price come back up, retest here. This would be your signal to go long on the market, and then you would look for TNX to come down into this. And obviously, if this happens, markets will continue moving up higher. So, oh, sorry. Okay. So that could be something that we want to watch out for. That could set us up for a long trade. All right, let's go into the Dixie here, Dixie Trixie, and see what we can take away from Dollar Land and where we are on the chart. I keep an eye recently, more of an eye on TNX, so I actually have not looked at the dollar in a little bit. So let's do it now together. I'm sure it's just getting hammered. Okay, so where am I? Okay, there they are. Cool. All right, so what's going on here in dollar land? Oh boy, just complete destruction, and that goes without. We didn't even have to really look at the chart to know that it was going to look something like this, as we have just come back here. But you can see also what we were talking about, this 106, 105, 87 area, right? This was the area that we said that if the dollar started getting underneath this, we would start to see moves down, and the market would come up. And look how nicely it gave us this opportunity coming right up into that area. If you're watching TNX, I mean, this just pretty much lines up with that 47 on TNX right here into the 106. You're initiating your longs, and boom. Now, of course, it's again tricky coming into data, but all things being equal, this is the trade that was set up there for you. But let's see here. We still have the 200. Now, the 200, obviously, SMA is much slower moving. It's now crossing over the 9 and 20, and right, kind of curling up, right? We can't deny that we do still see this type, this type of kind of rounding up, right? It's rounding up. And will it meet price, right? That will be the interesting thing to see how this continues, and if it starts to creep up a little bit more, or from here, if it starts to slowly kind of lag over and come back down. And that's what you would want to see if you were a bull in the market. So here we are right now at this key 104 area. We can potentially see some push here if we're going to be looking for the long trades using the Dixie, very similar to what we were watching on TNX. And if you get nice confluence on this, it's going to be the 104.55 area. So you would want to look for a move in the dollar like this, and then potentially a move down like this, and then we would meet up with, hello friend, here's the 200, something like that. So if the dollar comes up into this this area here, could there be a potential area for some longs, for that possible move to break through the 104 and meet up with the 200 here on the daily chart. So we will keep up an eye out for both those potential opportunities to along the market. Again, it's very scary with all these damn gaps, but doesn't mean they need to get filled today or this week or that next month. It doesn't mean anything. But we'll keep an eye on it, because eventually, at some point, those inefficiencies will have to get worked out. All right, so let's move right along. Let's get into some of our other charts here and see what we can take away from that. Now the VIX trading now down by 14, down about 4% today. Actually would have thought it would have been down a little bit more, to be fair, but we had talked about the 1572.16 area. Unless the bears can start getting us back over that, there's really no case for the VIX to move higher. No case for the bears, really. If it stays under that, we're going to trade back down into these low volatility levels, back down into the $12.72, $12, anywhere in this area. It's not it's a fun market in the sense that markets are going up, but as a trader intraday, it doesn't really provide us with the best ranges. And right now you're seeing NQ, or ES. I think it did 65 points today. NQ was up 300 points or something like that. That is all will be a thing of the past as VIX continues to melt. So also keep tempered expectations with your trades now, as we're coming out of a high volatility market and now kind of moving into a lower volatility, and that's going to eventually equal lower ATRs throughout the day and kind of less opportunities. For me, it's better to trade in a higher volatility market because you can make more money to the upside or downside. We are starting to see a little bit of this oversold reading here on the VIX, though, so I will be keeping an eye on that as well if this starts to curl back up and try to give some relief. Put to call ratio, nothing really too extreme here, just kind of sitting at our median reading right around that 74 or 75 area, so nothing really popping there. Okay, a couple of other things we want to go over here. What about the new highs? Oh no, we're going to look at the HYZ here, the corporate bonds. There was something going on here with the divergence that I was watching. That divergence has been taken out now. So we were watching the HYG and the fact that it did not make a higher high while the S&P did make a higher high. That divergence has been taken care of. Now HYZ corporate bonds have pushed up higher and made that higher high. So these now are back in sync. That's exactly what you want to see. It was a little bit of a red flag to me before seeing that divergence, but this has worked itself out nicely for the bull case. Okay, so let's move it along here, and let's go into let's look at the let's look at our 50 and our 200 period moving average readings for the markets really quickly. Much better here for the bull case. We are back above the 50% line. That is good as long as we're holding over the 50% line. Bulls are in total control here. This is our 50, the amount of stocks that are trading over their 50 period simple period moving average. We want to see readings over 50%. We are seeing that, so that is good there. 200 is almost there, kind of a little bit of an inverted head and shoulders type of situation kind of taking place here, right? And we've got our head, right, and we've got our shoulder, and this would be our neckline at the 50%. So if 200, if the SPX, I might sneeze, hold on. Okay, sorry. If the 200, if the SPX A200R gets over that 50%, that's going to be the neckline. Watch out for a push there in the market as a whole. Wouldn't be shocked to see us rally up and get readings here at that maybe 55% or 56%. Yeah, this is improving as well, but 50 is more convincing. This one totally not convincing yet, but it's definitely looking better overall. So that is a good for the bull case. We'll see how those look by the end of the week. All right, let's keep it moving along here, and let's get into some of our VIX internals and see what we can take away from that before we look at one more data point here. So let's look at our VIX futures. Oh, you know what? These are going to be expiring soon, and they might not even... I'm going to have to pull up the new contract, I think this contract has expired. All right, while that loads. Either way. Yeah. All right, I'm going to have to look into this because I think this one's expired or is expiring. So we'll just focus on the 9-day. Okay, here, 9-day versus monthly, nothing bearish here. Still under the zero line as long as it stays under the zero. Bulls are in control. Same thing here for the VVIX. We're just hanging out, low volatility in 80. Maybe this could be a little bit of a springboard to push us up over 80. If it gets much lower, then we're going to go down probably into the 75 area. Extreme low volatility, but we are well below the 103, 105 area. That was our precursor. Remember, if we stayed above that, bulls had a stronger chance. Bears had a stronger chance. Under, bulls do, and you can see just how nicely that really worked out. Once we got under, it was nothing but upside and for the market and downside for the VVIX there. So I will update this contract over the weekend because I think, like I said, it's expired right now. So But that's fine. Either way, I'm sure it looks something similar to this. Just a real deep contango now. No backwardation. So as long as it stays like that, um, bulls are good. Let's see here. All right. Let's keep it moving along and get a little bit more granular with our SMP. Take a look at some balance levels that we will be watching for the back half of the week. And then on the weekend, I will update the futures contract, and I will update the day trading SPY fibs, and we'll be good. All right, so let's break it down here. Let's get into a hourly chart or a 30-minute chart. Here we go. Where are we? Okay, here we are. Boom. Okay. Come on, zoom in. There we go. Nope, not that far. Oh, come on. Sorry, guys. Wow. Okay, come on. This thing's pissing me off. Okay. So, obviously, we've got to get over 450, right, for continuation. We got to get over 450. Watch out for the chop, as I mentioned. We'll see, though, if PPI brings any extra volatility for us in either direction. But watch out for the chop with the moves that we have been seeing. And right now, it's going to be, we got to get over 450 for that continuation. Easy squeeze, in my opinion. So many stops probably right in that area. And this market really has just been driven by kind of stubborn bears reshorting, shorting, and just the FOMO from the buyers. And every 2 cents that they get, the bears will cover, and then more FOMO buyers coming in, and it's just kind of a cycle that we're in right now of that, right? So over 450, next targets are going to be 451 and 451.45. We start really accepting below, 448.50. Then we can look for more downside here. You can see kind of where we stopped, anywhere in this 448, 447 area. If we really do hold, you can see here that even on the 30 minutes, it kept getting bought back up here. But if we start to really accept, say, even like hourly closes under that 448.50, a little bit more confluence then, and even an hourly chart, even an hourly candle can still fake you out. But obviously, the longer the time, a little bit stronger, the confirmation. That goes without saying. But if we do see that, then the next downside target would be coming into that 447.50. Under that 447 even, we break under that, we're going to come back down into half gap 446.25 area. Remember, when we were going over the daily chart, we also talked about that 446 area as being important. So under that, watch out below, because then we really may start to trap some of those late longs, and then we could see an easy move down into the 445 area once again. 445.50 could be a pickup there for longs. Sure, also the 446, another area where, can, all things considered, we could try a long. It's a buy the dip market now, all things considered, but we want to keep an eye on those internals to make sure that we're not trying to buy the dip if the rest of the market really is not supporting that. But that we are back kind of in that mode as it stands. So yes, we could try a move down here into a move down into here. Yeah, we can try something like that, right? If we came into the 448 50 area, 450 calls or 448 calls right there at the money, or if you want to do 450s, this could be a trade. I don't know if that will get rejected there for another double top potentiality, or you can, obviously it's a trade-off shorting into that 450 again, seeing if come on, go away, seeing if that breaks, and then looking for moves back into the 447 area. Yes, also here as we come down, another spot you can consider long, the 447 area, 447.50 at the money calls there. Coming up, first target's going to be the back test of this balance, and then trying to get over that balance, and then heading back for the 450. 446 at the money, 446 calls there could work, and it's the same situation coming up, trying to get into 447, 447.50 could reject there, might not. But if it does get over, that next target's going to be our next balance zone. It's just right back above 448.50 and 447.75 basically. So we will see what we get in the market over the next week. It's just been absolutely crazy moves, and a little bit ridiculous in my opinion. But we'll just go by with what we see in front of us here. So we'll be cautiously trying to hit the longs, but we just have to be very, very careful. So that's all I've got for you. Hope you enjoyed the video. Again, I apologize about the break in our updates, but we're back in full production again. I really appreciate all the followers and all the support from you guys, and if you have enjoyed the video, don't forget to subscribe to the channel, turn on those notifications for when we post new updates about the market, and yeah, smash that thumbs up. That really means a lot to me as well. It helps out the videos with the algorithms, especially since I've been MIA right now. I need all the help I can get. But yeah, all jokes aside, really appreciate you guys. Hope it helped, and we'll see you over the weekend. All right, take care.